watching Business Today Television. I'm Sakshi Batra and this is Market Today. This is where we will help you understand the trade setup of the day as well as how do you make strategies for trading and investments throughout the course of the day and the week going forward. We'll be joined by top market masters who will be helping you to identify the key stocks and the ideas for key strategies on trade, stock markets, on benchmark indices like Nifty, Nifty Bank, and of course share with us an outlook on the markets as well. First up, let's look at what is going to be important to track before we go into trade today. Remember, as of yesterday, we've seen the Indian equity benchmarks close higher, starting the week on a positive note. And that also brought in some relief to the Dalal Street investors as well. However, the Nifty has remained within a broad range of 22,300 to 22,600 for the last 6 trading sessions. It now is likely to take steps away from this range as well, based on the positive global cues that we are finally seeing. Especially overnight, we've actually seen the US markets trade for the second day in a row on Monday, rebounding from 4 straight weekly losses on Wall Street as well. What we've also seen is that the Dow Jones has gained about 350 odd points as of last night. This has taken the 2-day rally on Dow Jones in excess of 1,000 points. The S&P 500 ending 0.6% higher. Nasdaq, that was trading lower for the better part of the trading session, also recovered from the lows towards the end of the session and ended with gains of 0.3% as well. Asian markets also climbed, buoyed by the renewed optimism over China's economy, US data, that eased any kind of recessionary fears that were coming in. Japanese index outperformed, gaining by over 1%. We've seen Australia, South Korea also advancing in the early morning trading session. Futures of Hong Kong also showed more than 2% uptick as well. And this is after the US markets has climbed for the second day in a row. However, the pain point continues as far as the foreign investors' sell-off is concerned. They've again remained net sellers of the Indian equity markets for the 17th straight session. As of Monday, offloading stocks worth about 4,488 odd crores. Domestic institutional investors, however, have stayed net buyers for 27th straight session, and of course, buying 6,000 odd crore rupees, so making up more than what was lost by the FIS in the overnight trading session as well. Let's in fact welcome our guest on board. We have Mr. Arpit Beriwal, analyst of derivatives at Wealth Management Motilal Oswal Financial Services, joining in to help us understand the trading setup of the day. Warm welcome to you, Arpit. Good to have you with us. Well, what do you make of the positive cues finally coming in from the Wall Street and the Asian markets, and the Nifty also trying to break away from this narrow 300 point of a range? Of course, a lot of sectors are also supporting the sentiments of late, but is it going to be an easy recovery ride on the upside?
Very good morning, Sakshi. So, if you talk about first broader market and the index, if you talk about Nifty particularly, Nifty, if you look at the weekly setup, it has got stuck in a range from last 3 weeks, in a broader range between 22,000 to 22,650. However, if we see the daily chart setup from last 6 to 7 sessions, as rightly mentioned, it is trading in a very small range between 22,300 to 22,650 levels. At the same time, if we see yesterday, index opened positive. It remained range bound, was facing some pressure near 22,650 levels. That is this 20 demo also. But at the same time, the good part is that 22,300, 22,350 is a major support zone. And at the same time, market is been consolidative. So overall, looking at the chart setup wise, March series has been so far consolidation with a higher base. Before that, all the series were negative, but at least this series has been quite positive relatively, and we have seen recovery from 22,000 to 22,500 levels. At the same time, look at the option data also. One interesting part is that 22,500 is the maximum put OI concentration. So today, if we see a gap up opening and it's managed to hold about 22,600 levels, so definitely can see an uptick towards 22,650 and then 22,800 levels. In the meantime, if we see 22,333 is a major support zone till it holds above 22,333 levels, our bias would be positive with a range one move for Nifty.
Fair point. Arpit, we'll also welcome another special guest on the show. We have Mr. Arun Kejriwal joining in, a well-known market expert and a veteran of the markets who's seen many, many cycles and has been following the markets for nearly 3 decades now. Warm welcome to you, Mr. Kejriwal, and always a pleasure to host you on Business Today Television. I want to start off by understanding from you, what have you made sense of the current setup in the market? We've had 5 months of pain consecutively. After that, we've also seen fears of concerns of recession, as far as the US economy is concerned due to these trade wars. There are continuously, headwinds that are being thrown at the Indian markets. Even the slightest positive news is being sold off in the Indian markets as well. How are you really understanding what's going on in this current scenario, and what are you advising clients?
It sure is tough times, Sakshi. But good morning. Let's hope today's morning is a little more brighter than what we have seen. Holi is behind us, and I had requested friends and family members this time to use green only. If that could help, if that could help change the color that we are seeing in the market on a lighter note. Coming to more serious stuff, I think the biggest concern that the market is now having, we understand that the foreigners have been selling, and
Yes.
it's right since September, it's quite a bit of equity that we have sold. And fortunately or unfortunately, they seem to find a pocket where they need to sell more and more. Now it's the IT pack. Suddenly there is a lot of concern about IT earnings, and FIIs seem to hold tons and tons of paper of IT. So don't expect any respite as to what could they sell when levels are falling. They have the IT to sell. Uh, we have one more big factor that is now playing on the market. We have this 2nd of April date, which
Yes.
Donald Trump has announced, when tariffs would be introduced on many of the countries. I don't think anybody knows what he's going to do. And that old adage, only God knows, should now be replaced by only Trump knows. Because he seems to make announcements which change from the time of the day. Something in the morning, something in the afternoon, and something different in the evening. This is rattling markets. It's affecting companies, how they manufacture, how they go about doing their business. I'll give you one small example, Sakshi. We all know that the American auto manufacturers, and they are a large commodity in the world, set up manufacturing units for components in Mexico to take advantage of the lower cost of production on account of labor, etc. Now, if imports from Mexico, which also include these components, are to be taxed at 25%, it puts the auto industry in a complete mess.
Hmm.
They cannot afford to buy these components from Mexico. A, B, they cannot set up new manufacturing units within America, which in any case is exorbitant in the first place. C, they can't set up alternate units anywhere else in the world in such a short time. Is Trump suggesting that the American auto industry should come to a slowdown? God, God only knows, or Trump only knows.
Hmm. Fair point. You make a lot of pertinent points, and all of them required, delve deeping into it as well. And also, when we understand each and every point as to what kind of an impact can that really have on the markets, I'll just quickly take a detour, just mark for our viewers that the pre-open has opened. We had the opening tick above 22,900. Right now, also, there's a 1.3% of an uptick. There's a 284 point of a jump that we are seeing. So that's very, very smart at this point in time, and something that the Gift Nifty was already indicating. Arpit, you were hoping that in case we open with a gap up, we'll have to see whether it sustains at about 22,800. Does it look like a possibility?
So, Sakshi, if you see overall, generally we have seen good, very positive pre-opening session. Important where it settles around. So, immediate basis 22,650. So, if I talk about 22,650 has been the major supply zone for Nifty from last 5 to 6 sessions. And on the immediate basis, if we see if index open near that level itself, and initial half an hour to 45 minutes able to sustain 20 to 600 levels. So definitely you can see a good move towards 20 to 750, 20 to 800 levels. That is a major level. And why 20 to 600 is an important level? Because that is also its 20 dema, from where the index is finding some supply pressure from last few days. But the good part is that in spite of that, the market was holding well from last couple of days. So that clearly indicates that at least the base of the index is shifting higher. Somewhere consolidation is likely to take place, and slowly, steadily, we can see a move towards 20 to 750, 20 to 800 levels in the Nifty.
Okay, got that. We'll keep that thought in mind. Mr. Kejriwal, coming back to you, all the points that you really made, want me to ask you on how much weightage are you giving to the fears of recession that could come in the US economy because of the trade war that is only on the rise as of now? And like you rightly pointed out, that no one knows and no one can make a guess as to how Mr. Donald Trump is really going to go forward with his tariff talks going forward from here. So far, he's been aggressive. He's been talking tough on this matter. If this continues the way it is and only escalates from here, what is the kind of risk that we have of a US economy getting into a recession and the impact of that on world economies like us?
So there are three areas of concern which come up, Sakshi. I'm trying to be a little pessimistic while talking of this because you should be prepared for the worst while optimism doesn't take time to set in. The first is the fact that America has been seeing high rate of inflation, which has cooled off to some extent, but the economy needs reduction in interest rates, which can only happen if inflation does not rise again. What is now being proposed by bringing about this tariff regime will make products of daily necessity by a common citizen that much more expensive. And we all know that America does not make your regular consumption items low value, low in technology, but imports all of them from countries around the world, particularly countries like China and Mexico. In such a scenario, if you are left with just manufacturing your high-tech items and exporting them, you can be quite sure that the person who pays the maximum for this trade war is the common American who will have to pay for higher inflation, which is not what the economy wants, because it's not on the aircraft that you manufacture, it's not on the high-tech that you manufacture that affects inflation, but it is your daily household kitchen needs and that kind of expenditure that hurts your pocket and leads to inflation. On the other side, people thought that when Trump would speak so loudly and so boldly, other countries would buckle under and do massive changes and sort of come around. But it appears countries are now sort of getting their act together and wanting to take on Trump head on, whether it's the EU, whether it is other countries, they are all in a retaliatory mode and they do not want to be bullied by Uncle Sam. So I think this is something which is not too good for the US economy. The second point that we need to look at is the US dollar index. It had touched levels of 109, 110 and has cooled off significantly from there to about 101, 102 levels. This cooling off has seen global currencies appreciate against the dollar, and the edge that America was having has come down significantly. This means that the continuous flow of money into America with high interest rates would see inflows into America and investments happening across the world sort of petering off or reducing. Now that factor is also getting neutralized because India as a country is becoming attractive in valuations, not across the board, but our large caps seem to have come in a zone where you could see buying happening sooner than later. I'm not suggesting that you go and buy the market tomorrow, but
Okay.
I am just trying to give a longer sort of a picture that at some point of time, the advantage that Indian economy offers will be visible to the world, and the smarter investors will start looking at India, at least in the large cap.
Okay, we'll come down to some specific sectors and stocks in the large cap that you can identify for our viewers, sir. But let me just quickly go back to the markets. The Nifty has settled in the pre-open trade about 0.6% higher at 22,662. The Nifty Bank about 0.9% up. So outperforming the Nifty in the pre-open, 48,792. And that's what is the implied open for the Nifty Bank as well. Let's look at some of the heavyweight counters to see how they may be positioned in trade today. Let's start off with Reliance Industries and see how that one could be opening up. 0.5% higher. 12,242, about 5 rupee of an uptick on Reliance for today. Let's look at the banks. That's going to be an important one because the Nifty Bank is indicative of a higher opening. 1% higher for HDFC Bank at 1728. Let's look at ICICI Axis as well. ICICI Bank about 1.3% up. 1285 for this one. That's going to be important. Axis also about 1% high in trade. Let's also look at Bajaj Finserv and Bajaj Finance. Important space to really look at today. Why am I talking about this? Because Bajaj Finserv will be buying Bajaj Allianz's 26% stake of Bajaj Allianz Life and General Insurance for 24,000 odd crore rupees, and that's the big development that we will be tracking and the impact of that. 1.5% higher for Bajaj Finserv at 1900, and this is going to be a big M&A that we are actually seeing unfold in trade today. Apart from that, let's also look at IT, which Mr. Kejriwal rightly highlighted has been a pain point of late because FIIs are selling and selling big on the IT pack. TCS marginally up 3,500 too. Let's also pull up Infosys, Wipro to see how these pockets are improving. Slightly higher than what we saw yesterday, about 0.5% of an improvement that can be seen on this space as well. Let's come to Arpit first. Arpit, the two key stocks that you will be watching out for today.
Sakshi, we are seeing overall NBFC and banking sectors have been quite strong. And in spite of the market fall, this space has not outperformed, but relatively it has got stuck in a range. And if we talk about the ideas, one would be the for banking space, and second would be from the chemical space. From the banking space, if you look at the chart setup of ICICI Bank, private banks, this has been a huge outperformer. Looking at the chart setup wise, ICICI Bank is strong, gave a strong weekly breakout above 1275, 1280 levels on the weekly scale, from a strong bullish candle. And if you look at the setup wise, it's barely a couple of percentage low from its all-time high. So from the banking space, ICICI Bank will be a top pick that can slowly steadily head towards 1300, 1320 levels in the medium term. Apart from the second bet would be from the chemical space, and that has been SRF. So if we look at the chart setup of SRF, we have been quite positive on this counter from last almost 1 to 2 months. If we look at the monthly setup, it gave a classical pole and flag breakout above 2700 levels. It retested that zone and slowly, steadily it is moving higher. So yesterday it gave a highest daily close, and now as market is being supportive, definitely you can see strong momentum towards its new life highs towards 3200, 3250. So SRF would be a top pick within the chemical space. One can go along at current levels with keeping supports or major supports on near 2880, 2900 for an up move towards 3200 plus levels.
Okay, got that. So those are the two stocks that Arpit is betting big on. Mr. Kejriwal, let's hear from you. Large caps, as you believe, will be the turning point and will provide some hedge to investors' portfolios at this point in time. Where would you look for value, sir, at this current time?
Sakshi, let's go back to the good old tried and tested defensive sector, as it was known as, which is the pharma space. It's something which is now in a sweet spot. America is talking of imposing tariffs on products which are imported from even country like, say, India. Now, while India is a large player in the pharma space, we are exporting primarily generic drugs. Now, if generic drugs, there is a higher duty imposed, it is to be borne by the consumer and not the manufacturer. We all know the dependence of America on their healthcare system. It is the biggest item of expenditure that the state incurs, and they would have to foot this bill. There is no choice that would happen. The impact on the pharma sector would not be felt because it would impact prices marginally, because the generic drugs are a basic necessity. The innovator drugs that are made, far and few as far as India is concerned, and it is here where there would be a pain point. So many other countries would get affected. Besides this, I believe our banking space is in good shape. That's another area where you should be looking for comfort. Uh, the other guest on the show spoke about ICICI Bank. Uh, Besides ICICI Bank, there are other stocks in the large cap space which could be looked at. But let's understand one thing, that the Nifty composition of the BFSI space is close to 43%. So if you have uh, a meaningful move happening on Nifty without the BFSI participating, it just cannot happen. So pharma,
Okay.
banking are something that I like. Within banking, you can also look at the housing finance segment. That looks like an interesting uh, aspect. And if we are to say that it is insulated from Trump tariffs, it is something which concerns India and Indians only.
Okay, pharma and banking stories that we will keep in mind, and we'll continue to dig deeper into key stocks and ideas there with Mr. Kejriwal and Arpit both. Markets have started to tick. Let's look at that first. 22,620 in front of viewers on the Nifty, 108 points higher, about half a percent of an uptick, and the Nifty Bank also ticking by 0.6% up, 300 points higher at 48,644. Let's look at how the small caps and the mid caps are also opening in trade today, and an understanding of how the broader markets are taking shape, even though the benchmarks and the larger indices are doing well. There's a 0.4% of an uptake as far as the Nifty Mid Cap 100 index is concerned. Let's also pull up the small caps to see how that one is taking shape. About 0.6% of an uptick for this one. So largely green when we talk about the broad setup as far as the markets are concerned. Let's also look at how the Nifty advance decline ratio is shaping up today to get you a sense of whether the advances are higher. That has been the case over the last few days. 1413 advances to 442 declines, so that actually skews towards the advances, and that's also another positive. So we have a better part of the screen in the green at this point in time, be it the Nifty, the Sensex, the banks, as well as the mid and the small caps right now. Even when we talk about the Nifty top gainers, let's look at some of the top gainers on the Nifty then. The top movers, as far as the banking names are concerned, you have ICICI and Axis as among the top movers. You also have the metal name Hindalco among the top movers as far as the Nifty is concerned. You also have Shriram Finance, Eicher Motors, and HDFC Bank as those top movers as well. I think the Nifty is actually opening with strong gains across the board. On the Nifty 50, you have all the stocks barring just a couple of them which are on the declining side, and I think it's only ONGC which is on the declining side, but rest of the stocks are all opening higher. Few more stocks that are slipping away. But sectorally, the picture looks much brighter. Oil and gas, metals, FinServ, consumer durables, PSU banks, FMCG, healthcare sector. Talk about all of them. They're all opening in a positive zone. So good opening is what we have, but we'll just have to see whether this sustains on the positive side. I'm going to be taking a few names in terms of the stocks. These are the stocks news that you have been wanting to look at. Ircon International, let's look at that one. It has the Ircon BRC joint venture has won a 1,096 crore rupees EPC contract for new Shillong Territory, and there you see a smart 7% uptick on this one. Star Cement, it's been declared as a preferred bidder for limestone block. That's another one that you should be looking at. That stock is also up by 2.5%. Vedanta, that's another one that you should be looking at again. Chairman letter discussing demerger and growth potential. And he's been talking about how demerged entities have a potential to grow into $100 billion companies. So that's also going to be in focus. IRDA is going to be in focus again. The board has approved a 5,000 crore rupees of a borrowing limit increase for the company. The stock will be in focus. That's up by 2.5%. Unicommerce, that's also a recently listed stock. The board meeting is going to be taking place to consider issuance of equity shares. So that's also going to be in focus. Shilpa Medicare will be in focus. It has partnered with MapTree for a novel oncology therapy. That's going to be important to watch out for. Shilpa Medicare will be important to track, about 0.7% of an uptick on that one. Triveni Engineering, there has been some explosion at actually their plant in UP, although no casualties. So we are going to be looking at that one as well. AB Real Estate, Aditya Birla Real Estate is going to be important because Birla Estates has launched a luxury project, Birla Punya, in Pune as well. So that's also going to be important to watch out for. 3% uptick for this one. You also have Sundaram Clayton. There's an approval of sale of Hosur plant to Sandhar Rascast, and that's going to be important to watch for Sundaram Clayton as well. And apart from that, of course, what we were discussing, Bajaj Finserv among the large cap names, as to how now after the acquisition of Alliance's life and general insurance, the entire business comes 100% to Bajaj right there. So that's going to be an important one to watch, about 0.6% lower in trade. Arpit, coming to you. How do you see the opening, the key stocks that stand out for you?
Sakshi, if we see Nifty has opened gap up around 22,600 and Bank Nifty is holding well. So if we talk about the heavyweights, mainly Bank Nifty, if we see ICICI Bank and Kotak is leading from the front. So we'd like to continue to go long on ICICI Bank because it's given a classical range breakout and it is leading the Bank Nifty index from the front. Apart from that, one more stock that is there on radar is Voltas. If you see the summer theme that has been playing out, good recovery was seen in the counter, and last after a few days the stock again gave range breakout above 1460 60 levels. On the weekly scale also is from a strong bullish candle. So to play this theme and in next couple of weeks time frame, so definitely we can see a good move towards 1500 plus levels in Voltas. So ICICI Bank and Voltas looks good from the 2 to 3 days perspective, even from the positional wise. Apart from that, one more stock is there in the radar is as we already mentioned about SRF. So within from the similar space, if you look at the chart setup of Chambal Fertilizer, so if you look at the setup wise on the monthly scale, a strong range breakout above 545, 550 levels. Today the stock has cooled up from higher levels, but if you see the setup wise, it is very strong, and any dip towards 575, 75 levels can be bought into with a major support of 555 for a slow and gradual up move towards 600 and then 620 zones in coming few weeks.
Got that, Arpit. So we'll keep in mind all of those stocks. Coming back to Mr. Kejriwal, you rightly pointed out that large caps probably offer, a safer haven for investors looking for some opportunity even now. But so far, we've actually seen for retail investors, particularly invested in smaller stocks, they have had to face the maximum amount of pain in the recent downturn. High PE stocks have moderated quite a bit. I want to understand from you, would you still want to caution, despite the cool off that has taken place and the correction that has taken place in both mid and small caps, micro cap stocks as well, that this is the space to probably pull out all the money from, because we do not know how things are going to shape up from here. How would you really like to advise those retail investors heavily invested in this pocket?
So, Sakshi, this is your googly for the day for me. Let's understand the category of investors you are asking to be advised are those people whose numbers have quadrupled in the last 4 years post-COVID. They are people who have never seen a downturn in the markets and are experiencing pain for the first time. To tell somebody who is under pain that, gentlemen, what you did is wrong or what you are doing is wrong is very, very difficult. let's also understand that they have made money. It's not that they have not made money. And the markets ran up very, very sharply
Yes.
from March 20, about 25,000 levels to 84,000, whatever. So telling a person who's made money on his own that, gentlemen, what you've done was lucky, what you did was not necessarily the right and prudent way, is going to be tough. However, what can be told to them is that mid cap, small cap are typically high risk, high return items. But when
Hmm.
the chips are down, you need to move to safety, which only the large cap can offer. So it's now a question of rebuilding your portfolio after having seen a very strong rally over 4.5 years and a equally strong correction, if I could use that word, over
Hmm.
the last 5 to 6 months. In such a scenario, uh, what needs to be done is to take some tough decisions on what you are holding in the mid cap, small cap, micro cap space, and decide whether you have bought that stock on its fundamentals or as momentum plays. If you have
So,
bought them as fundamental plays, I suggest you can still continue to hold, because at some point of time, good value will always get recognition back again, even after a fall. But if you have got stuck into momentum plays, nobody can help you. Even when the market rallies, it's a new set of stocks that become momentum plays each time there is a new rally. The old ones normally never come back into reckoning.
hmm. So I will dig a little deeper, and I will ask you, which is the basket that you will put, popular stocks like defense and railways into? Would you put those into momentum basket, or would you put those in fundamental basket for retail investors? Because these were the pockets they heavily invested in.
Right. So let's understand, the theme word was PSU. Within PSU, you had three segments: defense, railway, and power. This is where I believe the bulk of retail money, the new investors, just put in and bought shares. What did they do? Uh, some of these railway counters, defense counters, and power counters went up 4 times, 5 times, 7 times in a span of 3.5 years.
Hmm.
They came to levels which were ridiculous under all circumstances. Let me single out two particular examples. One is IRFC and one is IRIDA,
Yeah.
two different PSU stocks. IRFC is a company which caters to the railways, but is a company which organizes the finance that the railways need to do their capex plans. They
Correct.
are not they are not a manufacturing activity of any kind. It's a financial company. As part of their activity, what they do is arrange for the funds, and these funds are taken on the balance sheet of the government of India. And for doing their activity, they get a commission. Now, if this share quotes at PE multiples which the railway stocks are catering to, and not what valuations are looked at by, say, finance companies, it's a misnomer. So you started getting IRFC. I think it touched a high of 200 rupees, if memory holds
Hmm.
me right,
Hmm.
ridiculous by all standards. And then when the price fell, it fell so sharply that people are still wondering what happened. The tragedy that hits such shares is that on the downside, there are more buyers because they believe you should buy at every dip. Let me now switch to IRIDA. What happened in IRIDA? It was uh, again a company thought to be in solar power generation. People bought it as a power generating company, not realizing this also is a finance company which is catering primarily to renewable energy, and within renewable energy, focusing on solar. It's again a like a bank or an NBFC, but dedicated to a particular activity. 32 to 320, 10x jump from listing to its high, and now it's around 150 or thereabouts. But people are asking questions on various television shows like yours as well. Can we now buy Irida? The valuation of this, if you will ask any fundamentalist, any analyst on your show, how do you value this company? They'll talk about price to book. They'll talk about various other such parameters, but nobody will tell you that at 320 it was attractive. Nobody will say that even at around 200 it's an attractive buy. But that was the madness that happened in these shares. So I believe there is pain still left in some of these counters. If I were to answer your question, within the railway space, what looks attractive, not necessarily at today's price, but as a business, is one RVNL, and the second is IRCON, because these are good manufacturing companies which are part of the ecosystem, which would benefit with the spending that the railway does.
Absolutely. Mr. Kejriwal, there is enough and more that should be discussed, in an ongoing conversation like this. Every word you say comes from a wealth of experience that you really have in the markets, and that benefits our viewers large. But as time would have it, we have to thank you, but we'll invite you very, very soon back again on Business Today Television to discuss this further, as far as how investors should be really looking at the current scenario to protect their losses and to continue to make profits and not lose hope in the investment journey in the markets because of the last 5 months of pain. And that will come when investors like you, when market experts like you really come on the channel and explain what exactly goes on right and wrong in the markets. Always a pleasure to host you, sir. Thank you so much for sparing your time for us.
Thank you, Sakshi.
All right. Arpit, you stay on and we'll continue to discuss the markets with you. First up, Bajaj Finserv is something that I wanted to discuss with you because that's an important one. Big M&A acquisition taking place now, and we are going to be seeing both life and health come under Bajaj's fold there. What exactly do you foresee for this, and how would you really read that?
Sakshi, if we talk about the Bajaj twins, comparatively from a chart perspective, Bajaj Finance has a better chart price action. If we talk about Bajaj Finserv, from the last 3 to 4 weeks, the stock has been stuck in a range between 1800 to 1920 levels. So today also, after a good positive start, the stock has cooled off from high levels. But at the same time, the good part is that it is holding its 20 DEMA. So overall, the base of the stock is shifting higher with major support around 1820, 1830 levels. Slowly, steadily, the stock can head back towards 1900, 1920 levels. So overall, range bound bias to positive bias. If we talk about Bajaj Finance, relatively the chart structure of Bajaj Finance is more promising as it's trading near its life high territory. Though from last 10 to 12 sessions, the stock is trading in a range between 8300 to 8600 levels. But the setup wise clearly indicates that further momentum in the NBFC in the banking space can propel it towards new life highs, towards 8,000, 880 and 9,000 levels. So both chart setup is they are strong. Comparatively, Bajaj Finance has more strong price setup as compared to Bajaj Finserv.
Okay, fair point. We'll also welcome Prashant Apsi, now research analyst at Mehta Equities, joining in. Hi, Prashant. Warm welcome. Good morning to you. Well, things slowly and gradually improving for the better. We now have 22,600 with us on the Nifty. And, as things are shaping up well, even in the US, things are giving us positive indications to continue with this slow and gradual recovery. What's the sense that you're getting in the markets right now? Are you confident of this recovery?
I think yes, a lot of microeconomic data with respect to US as well as domestic markets are giving some kind of support for Indian markets to be stable or trade in a positive zone. One can be again inflation, which is very much in control. Second can be again RBI pushing a lot of liquidity in the system, which can help economic to grow in the next financial year. Third can be again the way how the DII numbers are getting shaping up positive again. Fourth can be again the direct and indirect tax, which we got the numbers yesterday. So which was overall 15 to 16% growth in terms of YOY. So that is giving a lot of economical support for Indian markets to sustain.
Absolutely. So, Prashant, any key stocks or sectors you're watching out for where you are advising clients to now, in case they're holding on to cash, they can slowly and gradually invest in there?
So I feel still markets are in the trading zone. We need to respect stop losses and do, because every day, every night, there may be some kind of news from Trump and that trend can break down again. So I think with respect to that, again, Atmanirbhar stocks like Coal India looks very good for me on charts as well as in terms of fundamentals. So volumes have been grown. The power theme is still playing out. Higher the power demand, higher the coal demand. So volume will grow in Q4 numbers. So I think Coal India looks very good for me with a small trade at least for 15-20 rupees from current levels, with a stop loss of at least 380 from the current levels. This is one stock. Again, second would be Voltas. We have been discussing on your channel last many months again with respect to the summer theme. So Voltas still looks good for me from with the target of at least 1520, 1550 for at least near term. So these are the two stocks which we are recommending to our clients.
Okay, we'll keep that in mind as well. Let's get back to the markets and see how things are shaping up, and we'll also include Arpit into the conversation to spot some ideas for us. Remember, the Nifty is now up 0.7% at 22,681, holding up pretty strong. After the first 15-20 minutes have played out in the markets on trade. As far as the Nifty next 50 is concerned, that's even over a percent higher, so doing much better. The top stocks on the Nifty next 50 that are actually garnering some traction. You have Godrej Consumer Products, you have LTI Mindtree that was losing ground yesterday, DLF, you have Zomato also about 2.3% up. In trade, Tata Power is up in trade. You have VBL, Varun Beverages, Motherson Sumi, PFC, HAL, BHEL, Adani Green, some of these stocks that are doing well in the Nifty next 50. On the mid caps, which are also up by 1%, by the way, so much better than the benchmark indices. IRDA is pulling up 3.6% higher. Fact, Paytm, Policy Bazaar, all of them are pulling up. Let's pull up that space. Arpit, the new age tech space, I think that's garnering traction today. Zomato, Paytm, Policy Bazaar, delivery also, all upwards of 2.5 to even 4% higher in trade. How would you look at them?
Sakshi, we see overall, all this space has seen a quite kind of a decent correction in last couple of months. If you talk about overall within this space, Zomato is has relatively outperformed compared to the other trade setups. So if you look at the chart setup of Zomato, the major support is around 197, 198, where the rally started way back in 6 months back from 200 to almost 300 levels, and then the stock is back to its major support zone. So on the daily scale, the stock has negative formation lower highs after 3 sessions. Strong bullish candle reversing from its support zone. RSI, it's on the verge of the positive crossover. So I think within this new age company, that Zomato would be a preferred bet at current levels because it is near its support zone and the risk reward is quite favorable. Slowly, steadily, the stock can head back towards 215, 220 levels with a major support of 200. So Zomato would be a preferred pick within this space.
Zomato will be a preferred pick within this space. Okay, let's also pull up some sectors then. The Nifty Bank up over 1%, so the banks are garnering traction. Autos up by over 1% as well. You have all the sectors, in fact, which are into the green. There is no red among the sectoral indices, and that's a big positive as well. You have the financial services, you have consumer durables, healthcare, realty, private and PSU banks, pharma space, IT, FMCG, all of them up and about in trade. Media stocks also 1.7% higher. So strong gains across the board that you are actually looking at in terms of moves. Let's look at the auto pack. That also is looking interesting. There's Exide, Apollo Tire, Motherson Sumi, Bosch, a lot of these auto ancillaries that are pulling up in trade as well. Prashant, anything that looks interesting here?
I think there are two reasons why auto stocks are starting to be on a positive mood. One can be again the numbers of January as well as February, which are very much stable, not so bad as market were expecting. Auto ancillaries obviously would be a best candidate to play out here. So Motherson Sumi looks very good at this point of time, at least a 10-15% momentum can be expected. And in the auto sector, again, Tata Motors would be the best pick at this point of time again. So I think they have also announced with respect to price increase from April 1st. So I think that will also add some kind of benefit in terms of their Q1 earnings, which can be better than Q4. So these two stocks can be in focus.
Okay, fair point. Let's also look at some of the other pockets. Arpit, I want you to look at the IT pack. Remember, this has been a pain point for the last few days. And today there is some kind of a reversal happening. Even stocks like L&T Technology Services, LTI, Mindtree, Cisco, Forge, Wipro, they're all hovering higher. Would you buy this trade, or is this just a dead cat bounce?
Sakshi, if we look at the overall IT index, good 8 to 10% correction we have seen in this index in the last couple of weeks. And if you look at the chart setup, also mainly all the large cap and the mid cap stocks are correcting the similar pattern with the IT index. So instead of looking at the stock, I'll look at the Nifty IT index. We will wait for around 37,000 levels. Right now, the Nifty index is around 36,400, 36,400 levels. A closing above 37,000 levels will definitely short will confirm the downtrend trend is captured, and we can see some uptick. However, to play that move within the IT pack for some bounce back move, HCL Tech is trading near its major support zone near around 1500 levels, that is 100 weekly VEMA. And on the daily scale also it is consolidated. So in spite of a new fall in the IT index, the stock is relatively consolidating in a range between 1520 to 1580. So if we see some bounce back move in the IT index, so HCL Tech will go towards 1580, 1600. So HCL Tech would be a move that we can play out for to play the bounce back move in the Nifty IT index.
Okay, fair point. I hope this has helped you out in terms of the IT stocks as well. Prashant, coming to you on one of the stocks within the metals pack, which has been again in flavor of late. Tata Steel. There's been a block deal. About 29.5 lakh shares have been traded on this one. In fact, Tata Steel has also outperformed the markets in this year so far, in terms of the kind of moves that we have seen. Metal pack as a whole is getting into focus because of China growth coming back and economy improving. How are you looking at the metal story unfold?
Yeah, you rightly pointed out with respect to China news. Obviously, that is driving the whole world metal index. So that would be the one reason why again Indian metal stock like Tata Steel looks still good for me at this level with a minimum target of at least 160 or 165.
Okay, fair point. Let's also look at some of the other pockets. Okay, Arpit, bring us any key stocks or ideas where you can pick out within the mid and the small caps. Today, mid and small caps are definitely gaining traction. What is looking good to you?
Yeah, so if we talk about the consumer stocks, within that consumer, VBL would be a preferred pick. So if you see the technical chart setup wise, on the monthly scale, good recovery was seen from 420 levels in the Feb series, and on the weekly scale, it has given a range break of above 505 levels, managed to surpass this 100 VEMA. On the daily scale, a classical small pole and flag breakout above 505 levels, and today we have seen follow-up buying also. So VBL would be a preferred pick within this space. Slowly steady, the stock can head towards 535, 540 levels with major support around 505 levels.
Okay. All right, Arpit, we'll thank you then on that note for being with us in the morning edition today and helping us with so many ideas throughout the course of the conversation. Thank you and hope you have a great day, and we'll see you very soon back on another edition on Business Today Television. We'll continue our conversation with Prashant now. Prashant, where do you still find, caution or signs of worry continuing in the markets? Do you feel that there is some space despite the ongoing recovery in the markets that should not be touched?
I think still IT would be the space which I am still not so much comfortable, despite the index is showing some kind of positive momentum. But again, the reason why the stock is really up today, again, there was some kind of retail sales from US was still better than expected. So that is giving some kind of positivity where I think the IT spending will continue to be on a positive side. That is the only reason why the stocks or the index is up. But overall, I'm still worrying that a lot of pain can come into IT as a sector.
Okay, fair point. Now, I also wanted to get a sense with you on the pharma pack, particularly the recovery that is taking shape there. Mr. Kejriwal was with us before you joined in, and he was actually betting big on the pharma story. I want to understand from you as well. How are you assessing the pharma moves? Is this something that one should go big on?
No, right now I think we should have a wait and watch strategy on the pharma sector. No, we should wait for the April 2nd date of reciprocal date. So I
Yeah.
think that would be the time one can wait and watch and then buy pharma as a sector, because there may be some kind of big surprises which may come and have a bad hit on the sector like IT as well as pharma. So I am on the wait and watch
Yeah.
strategy right
Okay, fine. That is point taken. Now on the banking story as well. We have been discussing some of the opportunities that are coming in, but I want to ask you, Prashant, since the FIIs are continuously selling, even if there are some signs, some days when they actually the selling intensity reduces, but the next day it's the same story. They go on selling into Indian markets again. Now, banks are the places or the financials are the spaces where FIs have the maximum position. Do you believe that, a real sustainable recovery on the markets because of financials and banks will only take place when the FIs return?
I may not agree with that again, because I think the way how DIS are continuously putting lot of liquidity in the
Yeah.
market, and their cash positions have increased from 4% to 6% in last few weeks at least. So a lot of DIS are pushing a lot of money into the banks and supporting the markets. Obviously, yes, banking is a sector where a first recovery can be seen, that will be giving a lot of economical support for the overall market. So I think yes, FIs will continue and they will be buying the banking and financial sector, but may not be at this price, maybe at the higher price, but they will come back to buy finance.
Okay, fair point. But I wanted to pick out just one bank out of the entire space and discuss that with you. And make sense because last one entire week has gone into discussing and dissecting what's going on with IndusInd Bank. So I wanted to pick out that for you also to help us understand what are you really understanding in the ongoing process currently. When we look at, of course, the RBI came in support and said that yes, it's a well capitalized bank. There is nothing to worry. But there are brokerage houses which are now penciling in a downgrade coming in for this one as well. Of course, we don't discount that the depositors' money is safe. But when it comes to investors who invested at higher levels on IndusInd Bank, on a large private sector bank, management is coming out clean saying that yes, it will be a 1 month, 1 quarter of a hit, and we'll be back to the profitability path. How would you advise a retail investor to really go about this one?
So I will raise a question again with respect to retail investors investing at this point of time in IndusInd Bank. Despite RBI support, despite credit rating, reports saying there is a positive, stable outlook in the business, but once a credit worthy name goes out with this like this mismanagement, so I think there will be a big question for near term growth. Obviously, the loss which they are coming up with this quarter, I think it will be around 1,500 crores to 2,000 crores. That will be as good as 1 quarter profits of this bank. So that will be a big question raised. I will be advising my clients not to have a fresh position at this point of time. If there is a risky trader again, obviously 550 can be a stop loss for him to have a trade. But overall, I need to have a wait and watch strategy until unless we get the internal report by the RBI as well as the bank.
Got that as well. Now, so that's as far as the banking story is concerned. Now, apart from this, I also wanted to bring up one more stock for you. We were discussing with Arpit on the new age tech stocks on Zomato. He said that he still finds risk reward favorable and he's betting big on Zomato there. There's been a recovery from about 200, 201 odd levels back to 208 odd levels now on Zomato today. But then there is this another news that came in last night, and we need to keep an eye out on that too. Zomato is facing insolvency plea from uniform supplier over non-payment of dues. And this is Nuna Lifestyle, which is a B2B apparel manufacturer, which has moved NCLT to initiate corporate insolvency resolution process against Zomato for alleged non-payment of dues. And the company has claimed that the food delivery giant owes it about 1.65 crores for the uniforms worn by the delivery partners and other apparel as well. How significant is this news story? And do you think one should be really looking at this when one has a long-term investment view as far as Zomato is concerned?
Two ways again, as a long term no investors, again such kind of news will be sentimentally impacting the price, and obviously that would be an opportunity for a long term investors to buy Zomato, because the industry is growing very fast. I think it's growing almost 30 to 40% month on month, and the habit of people going to have the Zomato order every day is increasing day by day. So I think business-wise very positive, industry-wise very positive. Such news will give you opportunities. But for me, if I would like to advise people, buy Zomato as well as Swiggy, both. I think the sector will give you good boost for at least 2 to 3 years from current levels. But there may be some kind of dips with respect to valuations, with respect to their earnings, and with respect to news like this, with respect to getting into NCLTs. So that kind of news will be coming until unless within a shorter period of time.
Okay, fair point. Got that also as well. Prashant, any key stocks that you may have identified that you'd like to share with our viewers that I forgot to ask you maybe that should be on investors' radar before I let you go?
Two stocks again. Coal India I already discussed with you. I think that would be the one stock one should focus, because again a very decent company, good valuation, as well as there is a huge demand for power, and obviously coal is the backward integration for power supply. Second, again IRDA looks very good at for me at this point of time with respect to the price correction and with respect to the government focus on the renewable sector. So I think with respect to these two stocks, this can deliver you at least 15% return for a very short period of time.
Okay, fair point. Well, thank you so much, Prashant, for being with us in the morning edition today to help us navigate through a lot of opportunities in the markets. The markets are actually in fine fettle. First half an hour out, and you actually see 22,700 on the Nifty. We are near the high point of the day. And this is like a broad-based rally that you're seeing. The banks are really participating. The benchmarks are participating. The broader markets are definitely up over 1%. So it's an all-across-the-board kind of a rally. All the sectors are into the green as far as the Nifty sectoral indices are also concerned. 1% higher for the banks, 1% higher for autos, 1% higher for financial services, FMCG, IT near 1% up in trade. So it's all engines firing right now. Metals about 12% higher, PSU banks 0.7% up, private banks over 1% higher, realty over 1% higher, consumer durables. You see across the board, there is strong momentum that you are seeing. On the Nifty, when we look at the top movers today, you have ICICI Bank that's definitely throwing its weight behind the move, 2.5% up. Hindalco, Shriram Finance, Britannia, L&T, M&M are the top movers on the Nifty. Barring just about 4 stocks which are in the red, you have rest of them that are pulling up. So Bajaj Finserv and Bajaj Finance, of course, due to that M&A, slightly lower in trade. Bajaj Finserv down 1.4%. ONGC, BPCL and Kotak Mahindra Bank are some of the other counters that are absolutely flat with the negative bias at this point in time. But the sentiment is pretty strong at this point. Let's hope that this continues to build on throughout the course of the day. It started off on a terrific Tuesday. We hope it continues to be so. We hope you have a great day. Prashant, we hope all our viewers also have a great trading session ahead. We'll continue to catch you throughout the course of the day at various points when we will be tracking the markets for you. In case you have questions on the stocks that you hold in your portfolio or those coming afresh onto your radar, you want to deploy fresh funds, well, take an advice from top market experts. 12 noon, I'll be back with daily calls where you can ask all your stock-related queries and get custom-made advice from our top market masters. Stay tuned with us throughout the course of the day on Markets Today and on Business Today television.
Good afternoon, ladies and gentlemen. A very warm welcome to you on Business Today television and